Like and subscribe and click the bell icon to get new video updates.
Crypto's no good, very bad week just keeps getting worse. This is the web version of the Ledger, Fortune's weekly newsletter covering financial technology and cryptocurrency. Sign up here to receive future editions. For months, cryptocurrency bears, skeptics, and even some of the most optimistic prognosticators have been raising the alarm bell. A winter was coming to the crypto markets. And surely enough, if you were holding out hope for anything different, this week has likely taken that tint of lingering optimism, thrown it on the ground, squashed it, and then spit on it before walking away. To put it more lightly, the last 7 days have been dismal. Prices across the board, no matter your preferred data source, are in the red, as I write this essay Wednesday evening. Of course, the broader market has tumbled as well. But nothing has been on par with that of crypto's descent. Bitcoin and Ether, both down more than 22% from last week. The total value of crypto markets? Now $1.32 trillion, oh wait, $1.3 trillion. It was $1.8 trillion a week ago. And it is not getting any better. On Tuesday, in the first slug of a 1-2 punch combo to crypto investors everywhere, Coinbase, the largest US crypto exchange, reported earnings for the first 3 months of the year, and, well, it wasn't great. With trading activity dying down from its pandemic heights, Coinbase recorded a net loss of $430.7 million in the first quarter versus a profit of $771 million a year ago. The count of monthly transacting users on Coinbase, meanwhile, fell to 9.2 million in the quarter from 11.4 in the prior 3 months, though it was still up year-over-year from 6.1 million. And total trading volume dropped from $335 billion a year ago to $309 billion to start 2022. Coinbase did warn in February that a slowdown was on the horizon. At the time, it issued guidance for the quarter ahead based on the decline in crypto asset volatility and crypto asset prices compared to all-time high levels in Q4 2021. But the end result was far from what Wall Street was expecting, leading Coinbase's stock to plunge in trading Wednesday by as much as 31% before slightly recovering and closing the day at $53.72. For comparison, Coinbase shares opened for a week ago at $125. Ryan Armstrong, the co-founder and CEO of Coinbase, DOESNT, seemed too concerned, for what it is worth. On Wednesday, he tweeted a quote purportedly from venture capitalist and Coinbase board member, Fred Wilson, saying markets are irrational in the short term but not over the long term. They sometimes offer fire sale prices on the greatest companies in the world. It is not just Coinbase, though. The second blow to the crypto markets, the decline of TerraUSD, had already been bubbling up by the time Coinbase's earnings had dropped. But the brunt of hit came in the earliest hours of Wednesday, when the algorithmic stablecoin dropped below 30 cents, well lower than its $1 theoretical peg. UST, as TerraUSD is known, has since recovered slightly, trading at around 70 cents, as of late Wednesday afternoon. Created by Terraform Labs and its leader Do Kwon, the so-called king of the Lunatics, UST is distinct from the likes of Tether USDT and Circle USDC in that, instead of using a mix of assets like cash and bonds to maintain its peg, UST relies on what has been described as financial engineering. If you're looking for a more detailed explainer on how it works, check out this piece from Fortune's Marco Quiroz, Gutierrez and Taylor Locke. But, to oversimplify, the gist of what has happened of late is that, as University of Calgary professor Ryan Clements explains to my colleagues, algorithmic stablecoins ultimately rely on perception and demand. And, as you can guess, the perception around UST has shifted as of late. A recovery plan for UST is in the works, with the hope being that the stablecoin can become, well, stable again. Its success is far from guaranteed, though. But, between UST, Coinbase's recent woes, and an already shaky market, one thing is clear: winter is here. Just a quick note here: be kind to yourselves and others. Yes, crypto can be fun and goofy. It's a place where an entire empire is being built around some cartoon apes, after all. But this is also an asset class, and one where sudden declines can hit with very tangible implications. The last 2+ years of the pandemic have already been filled with mental anguish, burnout, and exhaustion. So, if you need help or if you're struggling at all, let someone know, reach out, or just talk. There's always someone who wants to listen. Declan Harty at fortune.com. Decentralized news credits Chainalysis, the crypto data and fraud tracking company, is now valued at $8.6 billion with a new Series F deal. FTX US appears to be inching closer to entering New York, having now filed for a trust charter with the states.